Hello guys, welcome back to my channel. Angie here, and thanks a lot for stopping by. To my new subscribers, you're welcome. Thanks a lot for subscribing. And today's video, I'm going to be talking to you about some of the candlestick pattern formations that you can find on the Forex chart that might give you an indication or a signal as to whether to sell or to buy. So I decided to do a little research on these candlestick pattern formations, and I realized that there are actually a lot of them out there, some of which I didn't even know of. But actually what matters is the psychology behind these candlestick pattern formations. Every candlestick on the Forex chart is telling a story, and it is important to know the kind of story that these candlesticks are saying in order to get an informed decision when you are entering into a trade. So just stick and stay. So there are about 7 or 8 commonly known candlestick pattern formations, and I'm going to be taking you through each one of them. And these are the engulfing bars, the bullish and the bearish, the harami bar, the bullish and the bearish, the Doji candlestick, the morning star, the evening star, the pin bar, the shooting star, and the tweezers. So our first candlestick pattern formation is going to be the bullish engulfing candlestick pattern. So here, as the name suggests, there's a bullish candlestick which is engulfing the bearish candlestick. So the bullish candlestick is the green candlestick, engulfing the red candlestick, which is the bearish candlestick. And here it totally covers both the wicks and the body. Usually the names are given to these candlestick pattern formations and based on the second candlestick or based on where the direction of the trend is going to go. And these candlesticks pattern formation should be used with other confirmation. It shouldn't be used as it is. So because all these candlestick pattern formations are reversal candlestick pattern formations, you might want to wait to see it formed around the retracement, or let's say around the supports and resistance area before you enter into your trade. And those are the other confirmations I'm talking about. So as you can see from the charts, from the ones I've circled, you can see that it was in a downtrend, and then it came around the support area and the bullish engulfing candlestick pattern was formed. So you can take a trade over there, or wait till you see another confirmation. That's the second circle, which is a retracement. You can see there is a bullish engulfing candlestick pattern there. The red candlestick is being engulfed by the green candlestick, and then you take a buy. The second candlestick pattern formation is the bearish engulfing candlestick pattern. And this is going to be the opposite of the bullish engulfing candlestick pattern. And as you can see, as the name suggests, there is a bearish candlestick engulfing or totally covering a bullish candlestick. So you should identify your key supports and resistance area. Here it will likely to occur at a resistance area. So when you see this pattern formation occurring at a resistance area, you might want to start thinking of taking a sell, but you'd have to wait for it to retrace. And after retracement, let's say it's in a downtrend, after a retracement, and if this candlestick pattern formation is formed there, then you can now take your sell. I'll show you in my next slide. So from here you can see that this trend is already in a downtrend, and so you can see that it retraced to where number 1, the point 1 is, and a bearish engulfing candlestick pattern formed, and then it came straight down and it retraced again to point 2, and then a bearish engulfing candlestick pattern formed again, and it came all the way back down. So the psychology behind this candlestick pattern formation is that the bulls represented by the green candlestick, or the buyers, were in control, but now have been engulfed by the sellers. So now the sellers are in control, represented by the red candlestick. Yeah. The next candlestick pattern formation is the harami candlestick pattern, and here the bullish harami candlestick pattern. In Japanese, harami means a pregnant woman or conception, and hence the name given to this candlestick pattern formation. So we have a mother candlestick, that's the bearish candlestick, the red candlestick, contained or conceiving a bullish candlestick, that's the green candlestick. So the first candlestick is the mother candlestick, and it is covering the bullish candlestick of the green candlestick. Yeah. So the psychology behind this candlestick pattern formation is that the sellers of the bears were in control of the market but lost their control, and now they've been taking over. The control has been taken over by the bulls or the buyers. Yeah. And this pattern or candlestick pattern formation can be found around a support area. Usually you would have to wait for it to form something like a double bottom before you enter your trade. So I'll show you in the next slide. So from the chart you can see that there is a bullish harami candlestick pattern formation at where both arrows are pointing at, and you can see that it's making a double button, like a W shaped pattern, and after that it went all the way up. Yeah, so you might want to take notice of that as well. The next candlestick pattern is the bearish harami candlestick pattern, which is the opposite of the bullish harami candlestick pattern. And so here we have the bullish candlestick being the mother candlestick, and the bearish candlestick, that's the red candlestick, being the baby candlestick. And the psychology here is that the bulls were in control, but now they've lost control to the bears. And so it can be found mostly around a resistance area. It's mostly effective around a resistance area, and so you would see it forming. You should wait for it to form like an M shape or a double top shape before you can take your trade. Yeah, it's mostly effective also on the higher time frames, like the 4-hour time frame or the daily time frame. Yeah, so you might want to take notice of that. So from the chart, you can see that there is a bearish harami candlestick pattern formation around this resistance area, where after there is an M or a double top formation, and then the candlesticks came all the way down. Yeah. So before I introduce you to the next candlestick pattern formation, this is the Doji candlestick. I mentioned earlier in my previous video that there's this candlestick which has the same open as the close. So price opened and closed at the same place or at the same time or at the same price. Yes, so with this candlestick, it represents indecision. Neither buyers nor sellers are in control of the market. And so we wait till we see the next candlestick formed. So wherever the next candlestick closes, whether it closes bullish or it closes bearish, that is where the direction of the trend is going to go. Yes, so I'm going to show you that in the next slide. So it actually brings me to my next candlestick pattern formation, which is the morning doji star candlestick pattern. We realized that previously we were only looking at 2 candlesticks, but this is 3 candlestick pattern formation. So we have the bullish candlestick, the bearish candlestick, and an indecision. That's the doji candlestick, and then the bullish candlestick. And then after that, we see that the trend goes in that direction. So here it happens, or it occurs at the end of a downtrend. Yeah, maybe around a support level, or maybe around, a retracement or something. But it happens at the end of a downtrend, and then it reverses to the upside. And this is the evening candlestick or evening doji candlestick pattern. So this also happens at the end of an uptrend. That's the opposite of the previous one. So it happens at the end of an uptrend. There is an uptrend, but then there is an indecision, and the next candlestick closes bearish. So then after the next candlestick closes, we would see that the trend follows in that direction. So I'll show you my next slide. Now from the charts, we can first see the morning doji star candlestick pattern formation over here, and sometimes the middle candlestick would just be a little candlestick and wouldn't necessarily be a doji candlestick. That would refer to as just the morning star candlestick pattern, but just because that there is a doji in the middle, that's why it's characterized by the doji candlestick. So the morning doji star candlestick pattern, but the idea is still the same. Like the evening star over here, the middle candlestick is not a doji candlestick, so we just call it an evening candlestick, and it doesn't really matter the color or how it closes. I'm talking about the middle candlestick. Once there is a small candlestick coming in between two big opposite candlestick, then it can be referred to as the evening candlestick, evening star candlestick, just the evening star candlestick, or even the morning candlestick, morning star. The names are just all over the place, but then if you understand the reason behind this candlestick formation, then you are good to go. You don't even have to memorize all these names. So the next candlestick pattern formation would be the hammer or the pin bar candlestick pattern, and the name hammer because of the shape, I guess, or how it's formed. So it happens, or it occurs at the end of a downtrend, and it doesn't really matter the color of the pin bar, whether it closes bearish or it closes bullish. The main characteristics is that it has a very long tail with little or no upper wick. So the psychology behind this candlestick pattern formation is that the sellers were in control and they were trying to push the price down, but then the buyers had more momentum, and so they came to push the price all the way up, leading it to have a very long tail or a very long lower wick with little or no upper wick. So you can see from the charts here, there is the pin bar of the hammer candlestick pattern formation, and as I said earlier, it doesn't really matter whether the candlestick closed bearish or bullish. What really matters is it has a long lower wick or a long tail with little or no upper wick. And so if you understand the psychology behind it, you are good to go. So once you can see it occurring around the support level, then you might want to think of taking a buy order. So the next candlestick pattern formation is the shooting star candlestick pattern, which is the opposite of the hammer or the pin bar. And this is also characterized by a very long upper wick with little or no lower wick. It occurs at the end of an uptrend, and the psychology here is that the bulls weren't able to push the price up, or the buyers weren't able to push the price up enough, and so they lost control, and as the sellers came in to push the price way back down. So I'll show you my next slide. And so you can see the shooting star pattern formation formed over there clearly, and you see the long upper wick with just a little bit of the lower wick, and so the uptrend ended at that resistance area. The candlestick pattern formed, and then the continuation was a downtrend. Yeah. So if you've watched this far, then congratulations, because it's going to be our last candlestick pattern formation, which is the tweezer bottom, or the bottom tweezer. So it occurs at the end of a downtrend, and it is characterized by two opposite candlesticks. First, the bearish candlestick having the same body size as the bullish candlestick. So here we are looking at the body sizes. Well, we are not taking into consideration the wicks, but the bodies. So you can see that the bodies of the bearish and the bullish candlesticks at the bottom parts of the screen are the same. So after the close of the bullish candlestick, then the uptrend would follow. Yeah. So you can see it as I've indicated here. There was a retracement to the downside, and then a bullish candlestick of the same body as the previous bearish candlestick formed, and after it closed, then the continuation was an uptrend. And then we have the tweezer tops, which is the opposite of the tweezer bottom. There is an uptrend, and at the end of the uptrend, a bearish candlestick formed, which had the same size as that of the previous bullish candlestick. And after that, the continuation was a bearish continuation, or a downtrend. So as you can see here, there was a retracement to the upside from the first circle at the top, and after the bullish candlestick ended, there was a bearish candlestick with the same size, closing the same size as the previous bullish candlestick. And after, there was a downtrend. You can see from the second circled candlesticks as well. So there was a bullish candlestick, a bearish candlestick of the same size, closed, and the continuation was a downtrend. So you might want to take notice of all these things. As I said, it cannot be used like that on its own. You have to use it with other probably indicators. I don't use indicators. I solely use price action. And so if you're the type that would use indicators, you should use it with other indicators. Or let's say the Fibonacci retracement tools also can help you. And yeah, you should also remember that for some of these candlestick pattern formations, the higher the time frame, the better the trade, or the more probable that the trade is going to end in profit, or it's going to be positive. So the higher the time frame these candlesticks are formed, the more probable that you are going to win the trade, and the farther the trades would go. Yeah, so I've come to the end of my video. I hope you learned something. I'm sure you did. You can go onto your charts and start identifying some of these candlestick patterns. And yeah, I'll see you in my next video. Don't forget to like, subscribe, and share. Bye.